Hello, hello, hello. Oh, my camera's not on. Give me a second. Is it a bit silly? Let's see. There it is. Hello, everyone. Good morning, good afternoon, good evening. How's everyone doing? How is everyone doing? Is everyone having a great weekend? Happy Sunday, everyone. Hello, David. Perfect. Someone will get on it. Even if it does cancel, even if your subscription does get canceled, you won't lose your progress. So it will still be there because it's connected to your account. So no worries. Hello. Hello, Michael. Hello, SVY. How are you doing? Perfect, Joseph. Perfect. I'm doing good, thank you. I'm doing good. Hello, Dawn. Great to see you again. How are you doing? Hello, Andrea. I'm doing good, Rahul. Thank you. I'm doing all right. I'm doing fine. So far, so good. Hello, Nalin. Hello, Isaac. Perfect. Thank you, Samson. Thank you. Thank you very much. All right. My stream is lagging. Oh, this should be all right. Do let me know if everyone can see me, if everyone can hear me, just to double check. So we can get started as well. Hello, Ricky. Hello, Peter. All right. All right, we can go over that. Feel free, by the way, if you do have any questions right here, let me show you. If you go to the link, first link in the description, you can ask questions. You can also give thumbs up to questions. So for example, FVG Amateur right there had a question, asked it right there, and it is 5 thumbs up. So we're going to go over the most popular questions right here. And then we'll see how far we come before my brain again gives out, if that makes sense. So if you have any questions, feel free to go to that link in the description. You can ask me anything right there. The most popular questions, we'll dive into them. All right. Long time no see indeed. Long time no see. How are you doing, King Sami? I'm doing good, J-Well. Thank you. Hello, Marcel. All right, perfect. Let's get it started. We are going to do exactly that. So the topics for today, again, first we're going to dive into the forecast. Then afterwards, we are going to dive into the questions. Okay, so again, I'm going to mention it again. If you do have any questions, dive into the description. First link in the description, you can ask me anything. You can also give thumbs up to the questions that you want to have answered right there. So we're going to work our way down from the most popular to the one with the least thumbs up right there. All right, perfect. First of all, let's go over forecast. It's been some time. When is the last time we did a forecast right here on YouTube? Where have you been? Yeah, I've been stuck in my own head. No. I've just been not here. I don't know. I'm not sure what exactly it is, but we're back. We're back right now. So let's dive into the forecast. Many things, to be honest, well, I say many things have changed. That's not necessarily true. For YouTube, potentially a few things have changed as well. So the MMT, you'll notice, is quite different at this moment in time. Not necessarily very different or anything like that, but it's just, let's say, for example, the economic calendar. The economic calendar, the way we used to use it, for example, mainly talking about on YouTube, etc. as well, is not necessarily the same. Now, of course, I have a video regarding that as well coming up, so no worries about that. You will learn about it as well. But ever since Trump has been in presidency, you might have noticed it for yourself as well. The economic calendar hasn't functioned the exact same like it used to. So that's quite interesting to notice. Anyway, if we do take a look at the economic calendar, the main thing I want to pay attention to right here is if there's any big 3 news events. And if we take a look at the upcoming week, we don't have any big 3 news events. That's good news. So overall, this economic calendar heading into next week looks quite good. I don't really have anything to say right here, as in you should watch out for a Friday or anything like that. No. This looks good. looks quite nice right here heading into this next week. I'm doing good, Christopher. Thank you. How are you? How are you? Okay. So without further ado, let's just dive straight into the price action right here. Very interesting price action on the dollar. Now, we've already talked about it a little bit on Friday. Again, every Friday we also go live 2 p.m. New York local time, the same time. Just on Friday, we'll recap the week a little bit. What is important to understand right here on the dollar before we dive into the indices? I think it is very important to understand that we are potentially looking at this sweep of that low right there. So a lot of times, and I want you to understand this evolution, because if you really want to be up to date with what we're currently looking at, for example, you should understand what is preventing us from continuing lower. So we have been continuing lower, right? We have been continuing lower. We can see that right there. So at this moment in time, what is preventing us from continuing lower? It's this sweep right there. Also known, it's an argument. It's a bullish argument at this moment in time. Why is that important to understand? It's because you can have these fair value gaps right here, and you can sit there and say, well, if we are bearish, what can we continue lower from? Then it might be this bearish fair value gap right there. But that bearish fair value gap won't hold if the thing that is preventing us from continuing lower is still intact. This is very important to understand, because when you think like that, you're always going to be one step ahead of what price action potentially wants to do, if that makes sense. So as long as we are still sweeping this low right there, again, the only real objective thing that we are dealing with is potentially higher prices right there. So what we see right here is that we have this daily fair value gap. That daily fair value gap we could, of course, see a retracement back into. Now, what we're doing, again, there's many different options of what can happen in price action. So the first time you open a chart, there's many different things what we can do. For example, we could already continue higher like this. We could also disrespect this fair value gap to then continue lower like this. We could also retrace back into the fair value gap to then continue higher. There's many different options, many. So the goal is essentially, and what we did in the daily bias video, for example, that was uploaded today, the goal is to refine the options. So we have many different options. What can exactly happen at this moment in time? Okay, if we get a retracement back into this fair value gap, it's important to monitor to get a rejection. If we respect it, we can still continue higher towards whatever high we have created right there. If we disrespect it, that's going to be an area of opportunity, like we mentioned in the daily bias video, to then continue lower again. If we do not see a retracement right here, and we already continue higher right here, then what is currently preventing us from continuing higher? It's this 4-hour swing high that we are struggling with. So if we can now start running it and continue higher here already, for example, new expansion candles, new fair value gaps right there to continue higher, start looking at these targets on the 4-hour, this high right there. Start looking at this swing high right there. And then just, again, start looking at the next pity rate right there. Why? What are you doing at this moment in time? All you're doing right here is then just trading in between the pity rates, like the daily bias video. That's all you're doing right here. And let's say we do get the retracement right here back into the daily value gap. If we respect it, what are we doing? We're trading again in between the pity rates to continue higher. If we disrespect it, so something like this, where we have this rejection low, what are we doing? We're again trading in between the pity rates to now continue lower, if that makes sense. That is very important to understand. So now you're already aware of all the different options that can happen. All you need to do throughout the week, keep your mind open. Keep your mind open to what we can potentially do right here, to the different options that we can have. I see a question right there, really quick. Also want to go over that right there. How about Powell speaks right here? Powell speaking, to me, not necessarily that important. Yes, it's red news right there. So for example, it's quite important context. If you're in a 1-minute trade right there, whilst we arrive at the US dollar red folder news for Fed Chair Powell speaking right there, you want to be very careful. So if you have a 1-minute trade, 1-minute stop loss, etc., again, you want to be careful around that. If you are generally speaking in a 1-hour trade or above, you shouldn't worry too much about that, if that makes sense. Let's see. See a quick question right here as well regarding the dollar. Let me know if the dollar makes sense, by the way. But don't you see these swing points also as an area where we can continue lower from? Very good question. So right here, these swing points right here, they are order flow. They are, bump in the road resistance. So there's two types of resistance. And there's order flow resistance and bump in the road resistance. So generally speaking, can we get a rejection from it? Yes, we can definitely create a rejection, create a retracement like this to then continue lower. But these swing points right there, they at first are bump in the road resistance. And what that means is that we more so expect a rejection from it to then continue higher. So this is the difference between the different types of resistance. For example, this fair value gap, we don't expect lower price from it. We expect a rejection from it to then continue higher from it again, if that makes sense. Whereas this fair value gap, that's a little bit different. Same for this fair value gap right there. That's where we still, like we see right there, can create a large rejection to continue lower, to then continue higher again, if that makes sense. All right, perfect. Let's move on. So when we understand this, again, if we first go over the majors before we dive into the indices as well, then the Forex majors right here, a little bit tricky, in my opinion, not necessarily my preference. So what we talked about on Friday as well, I'm not necessarily looking at the majors a whole lot at this moment in time. Unless we can turn it around and we can continue higher, for example, right there. That could be quite interesting. I can understand that. For example, GU following through lower, that could also be quite interesting right there. But for myself, I'm looking a lot at this moment in time at the indices. I'm looking a lot at the metals, which in my opinion are a lot more interesting at this moment in time. So let's dive into those. Okay. So if we understand right here the all-time high protocol regarding the indices, then again, I think it's quite straightforward, right? I think it's quite straightforward what we can potentially look at. Okay, let's see. I see a question right here. Quickly want to go over it. After disrespect of swing points, do we need to incorporate time? Most opportunities seem to just play out even before kill zones. Yeah, very good observation, Benson. No, you don't necessarily need to worry about time. That's a video I'm going to have out hopefully next week, Thursday. A video regarding time, economic calendar, and updated video as well, because some things since Trump has been in presidency have changed regarding that as well. Very important to understand. Okay, so again, like I mentioned right here on ES, if we have been going higher right here, then for the week that is about to come, my main objective is just going to be, can I look for new buys constantly? Can I just simply look for new buys over and over? So you will notice right here, I'm not necessarily that focused or not worried about what can we continue higher from. So for example, can we create a retracement back into that fair value to then continue higher? I'm not trying to force the idea of shorts right here. All I want to look at is, can we continue higher again and again and again? Now, for all-time high protocol, there is one important thing to understand, that for me, I like to wait until we get these bigger rejections right there. Create some fair value gaps actually against us. So we have some retracements to work with. And then we can accurately say, once we disrespect those, we can continue higher towards an all-time high again. So that is for a large part what I will be waiting for right here on ES and NASDAQ. Now, unless we see a very, very large drop-off and we disrespect all the discount rates right there, and we can continue lower, potentially then I will start looking for shorts. But at the first few days right here, once we start to create these retracements, I just want to see, can we overtake the premium raise and continue higher again towards an all-time high? That's all I will be waiting for. So that's very similar, for example, on NASDAQ right here. That's also what I will be waiting for. And if that retracement happens to be back into this daily fair value gap, perfectly fine. But it's more important, once we retrace back into the daily fair value gap right there, which fair value gap that do we have at that moment in time that is preventing us from continuing higher? Can we overtake that to then continue higher again? Like we've seen in the all-time high protocol, it's the same thing with the daily buys, if that makes sense. So YM and Russell right here, for example, a Russell, you could argue a little bit more interesting. Why? Because we already have a 4-hour fair value gap right here that we are dealing with. So if we can overtake that to then continue higher again, that could be very interesting. That could be very interesting to then start looking for buys again as well. And let's see what we have on YM. No, YM is very similar to NASDAQ and ES in that case. Not that interesting, not at this moment in time. Let's wait. DAX to me hasn't really been that interesting in a very long time for the indices. And why not? Because it has been very weak. So for example, if we compare this to the other indices, we see we haven't been moving higher at all. We've just been consolidating. We've just been moving lower right there. Not an interesting price action, in my opinion. So for me, I would personally prefer to take a look at, for example, ES and NASDAQ, or at this moment in time, even Russell right there, if that makes sense. All right, gold. So this is where we get into the real stuff. Sounds a little bit dramatic. It's not that dramatic. Okay. So on gold right here, let's see what we have on the higher time frame. So we have, for example, the fair value gap right there. I don't think I really have to explain the higher time frame bias, right? I think the higher time frame bias is to a certain degree quite clear right here. Why? Well, I mean, we've been moving higher. It can't really get more clear than that. Gold is a nice asset class as well, so it's likely to continue higher. So again, I think we should just look to buy again. Now, of course, the tricky part right here is, okay, but can we then first retrace back into these fair value gaps, into that fair value gap, to then already continue higher? What can we do? Or can we first reach this high right there as a target? What is it that we will likely do right here? I remember I made a video for a long time ago, I think, but I'm not too sure if I even made the video for YouTube. But oftentimes, the way liquidity works is that even if we want to continue lower, we still need to continue higher first. Why? Because in order for price to move lower, it doesn't move up straight right there, down straight. It's not how price action works, right? So oftentimes what you'll notice when we continue lower, something like this happens. And we sweep and then we continue lower, if that makes sense. So that's what we call oftentimes a fake bottom, a fake top as well in the MMT. Something like this happens and we sweep at bottom time and then we continue higher right there. So that right there is a suspicion that we might have. Now that suspicion can be fueled by actual facts if there's at this moment in time nothing preventing us from continuing higher. We touched on this a little bit during the recap on Friday as well. So what we see right here is that we have order flow resistance on the 4-hour time frame right there. We also had it on the 1-hour time frame a little bit earlier. We start running this rejection high very nicely. So at this moment in time, in my opinion, depends a little bit how we open up later today as well. But we have quite a clear path to first continue higher towards these targets. Then seeing, once we reach these targets, what can we do? Can we sweep it? Can we simply continue higher again? And then again, it simply becomes an all-time high protocol again, right? So if we create a rejection, can we overtake the fair value gaps right here to then continue higher towards an all-time high again? And it's the same thing that we are doing here. So gold, in my opinion, at this moment in time is already quite interesting to continue higher right here, not financial advice. So this right here looks good, This is so far the most interesting instrument that we have gone over, in my opinion, at this moment in time to continue higher as well. Looks very good. All right. Silver, in the short term, very similar, looks quite good to continue higher. After we start reaching certain targets all the way towards the left right here, we need to reassess. So for example, with that weekly swing high that we have towards the left, how big is the rejection from it, etc.? Can we overtake it to then continue higher again right there? But overall, again, gold, silver, I just want to look for reasons to buy and buy and buy again. So it all comes down to an all-time high protocol, that video, if that makes sense. Okay, let me know if that makes sense. If that doesn't make sense, of course, feel free to ask me as well. All right, let's see. I see a question the side of my eye on gold as well, but we'll dive into that. Bitcoin right here, quite interesting as well. So Bitcoin, at this moment in time, in my opinion, we are looking quite nice to continue higher, potentially towards an all-time high. But it is going to really depend if we can run this rejection high. So for example, if we open up, well, Bitcoin is already open, but if we now open up on Monday, so the Monday happens and we start to continue higher right here, and we start reaching above this high, that's very interesting to then continue higher towards the next high that we have right there, which is the all-time high as well, if that makes sense. So that's the only thing I would be looking at right there on Bitcoin. Crude oil, in my opinion, not necessarily that interesting. And the reason why is because we have this large consolidation right here, which I'm not a big fan of. So I personally would rather not look at this, if that makes sense. Some of the JPY pairs right here could be quite interesting to continue higher as well, but they definitely need some time right here to continue higher. Australian dollar JPY, Euro JPY could be quite interesting to continue higher right there towards the next few targets as well right there. Now, what is important for you to understand is, again, I really want you to focus on your instruments, right? When we dive into the next week, focus on your instruments, have the parameters for your instruments. So for example, as you can already notice, Arjo goes over all these instruments right here, but for my trading plan, I'm going to really focus on gold right there. I'm going to really focus on gold at the start of the week to see if I can buy towards the next all-time high right there. then I'm also going to focus on the indices, for example, ES and NASDAQ, and I know exactly what I'm waiting for. So for example, NASDAQ, I'm waiting for a rejection, fair value gap against us. Can we overtake that to then continue higher again? That's very important to understand. So for your trading plan as well, you should understand that. You should somewhat know that. And again, it's not a shame if you don't exactly know it by now, but start working towards it. If that makes sense. That's very important to understand. Let me know. Let me know if that makes sense. Again, if you do have any questions right here, because we're going to dive into the questions as well, feel free to ask me. Feel free to ask me. Feel free to give thumbs up to the questions that you like, that you think need to be answered right there, and we'll dive into them as well. All right. Let's see. Let me move the face cam a little bit right there. Let me first ask as well, does the analysis make sense? Does it make sense? How is it? How is it? How is it? How's everyone doing? Is everyone still here? Everyone still awake? Or did I talk everyone to sleep? Let's see. Thank you. Thank you. Thank you. Thank you. Thank you very much. Gold coming off daily bearish value gap on CFD. Yeah, I personally focus a lot more on the futures chart as well. On the futures chart. Makes sense. Perfect. 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 Lovely to hear. All right. I'm curious as to how you trade NASDAQ on FTMO. Good question, Michael. I use CFDs, so it's a very bad habit. I wouldn't recommend this. I'm slowly going to experiment as well, switching over a little bit to futures. But for example, I've been trading for investors a lot. And if I focus on, for example, Forex majors, and I focus on also the indices a little bit, then if I need to split that capital also to, for example, futures broker, it's not necessarily ideal. So I've created this bad habits throughout my years of trading, where I focus a lot on trading the futures here, yes, on TradingView, but then I execute using a CFD chart. It's not ideal. I wouldn't recommend it. It's if you really want to take the futures seriously, which I'm going to do a lot more as well, then just focus on, for example, futures prop firms, futures brokers, etc., as well. If that makes sense. Yeah, that tends to happen. There was a video as well. For example, the video I made on, I'm not exactly sure which one it was, but it was one of the 100K accounts on FTMO. You saw me getting screwed up a little bit on silver because I executed on CFDs. If that makes sense. Not only, Gustavo, not only, for example, JPY pairs to me is also very, very interesting, but also a lot, for example, Euro US dollar, Australian dollar, US dollar was also very interesting in the past few weeks, in my opinion. Oh, probably because your application was not that good. That's probably why. Apply for thumbnail design application in your proper channel while you ain't replying. Probably because your application was not that good. And we found someone better. I'm very sorry. Perfect. All right, perfect. Well, let's dive into the questions we have then, right here. Let's see. Let's see what we have. Let's see what we're dealing with. All right. First question by Arun, right here. I hope I pronounced that correctly. I'm sorry if I don't. Gold. When would you have predicted the 4-hour expansion candle before it happened on Friday? I got stopped out a couple of times during Asia/London in doing so. Okay, so predicting the 4-hour expansion phase candle, I don't necessarily do that, if that makes sense. I'm not trying to predict. Well, of course, you're somewhat trying to predict it. But what I'm going to do right here is I'm just going to mark out where I think the opportunities were, if that makes sense. So if we first take a look at gold right here for Friday. Okay, then I'm going to take a look at the 1-hour time frame right here. If we take a look at the 1-hour time frame, this is our main concern right here. This 1-hour fair value gap right there. Because that's overflow resistance. So that is our direct resistance that we need to overtake. Why? Because this fair value gap right there could cause us to still continue lower, if that makes sense. So this is very important right there, that resistance. Now, once we start to overtake it, how do we overtake it again? Objectively speaking, okay, you have a rejection high within that fair value gap. If we run the rejection high, we can then start to overtake it, and we are disrespecting the fair value gap. That's very important to understand. Okay, so that fair value gap is gone. We don't do anything with it anymore. We just focus on the recent price action. Now we see these new fair value gaps getting created right here. Now for me, this in itself is already an entry, right? Now I'm going to explain my trading plan a little bit in a nutshell. The moment we overtake the rejection high, we start running the rejection high, I enter on the future order flow leg. So the future order flow leg right here is on the 1 hour time frame. That is where we create the expansion phase candles. So in theory, what should happen? You really need to think forward, think ahead, think in the future to be one step ahead, if that makes sense. Okay, what should happen the moment we create this expansion candle? Well, the price action, and that doesn't mean it's guaranteed, right? That's not what I'm implying here. I'm saying what should happen. It should create a new fair value gap right here. If that creates a new fair value gap, that means this is a new order flow leg right there. So that means this is the first line of defense. This right here, the fair value area, is going to be the overlapping defense right there to potentially continue higher from. In the worst case scenario, if we do create a retracement right there. So if I enter on an expansion candle like that, I cover the lows right there to then continue higher, to then target my simple 1 to 2 RR, if that makes sense. So that is, for example, where I would look to get involved right here on gold. Now, where are the opportunities afterwards? For example, once we do create this fair value gap, you can do the same thing right there. To now look, okay, can we overtake that? This is a little bit more tricky on the 1 hour time frame. You can see it more clearly on the 15-minute time frame right here. We overtake that fair value gap right there, running rejection high to already continue higher. Now, the important part here is understanding that the 1 hour, this was the most recent order flow leg. So retracing back into whatever is here right there, those fair value areas, is not too crazy right there. We can still retrace a little bit deeper to then continue higher right there. And this is something, but it gets quite advanced. I don't want to overwhelm you too much right here. The moment we start running this rejection high right there, which happens in this next candle right here, that one right there, this is where we start running this rejection high from the 4 hour value gap. This price action right here is a lot higher probability to now look to get involved to already continue higher right there. Once we start running this rejection high from the 4 hour value gap towards the left, if that makes sense. The reason why that is because it's the higher time frame right there. So sometimes people focus too much on the rejection within the rejection, if that makes sense. That makes it lower probability. Let me know if that answers your question a little bit right there, Arun. If it doesn't, of course, feel free to ask me. Feel free to ask me as well. All right. Okay, let's see. Referring to your last video about bias, I believe, about the two methods. Okay, yeah. If the resistance, the fair value gap, comes out of nowhere, should I consider it as a resistance or a fake fair value gap? I love this question. I love this question a lot. Super good question. So this is very interesting, this question. Now, what I think is very important is because we talk about these manipulation fair value gaps, right? We talk about these fair value gaps that move into one direction right here against our higher time for bias, essentially, that we suspect is a fake fair value gap, right? So what I think is very important to understand is this is also a reason, for example, why I'm not necessarily a big fan of fundamental trading. I think you can make it work 100%, but a lot of things that people do is open to interpretation. Open to interpretation too much. So what I think is very important to understand is you don't act on suspicions, you always act on facts. That's it. So for example, when we have this fair value gap right there, I can have a suspicion right there that this fair value gap might not hold and that we can already continue higher right there. But you never act on a suspicion. You only act on the fact that you are dealing with. So the fact is that we have a bearish fair value gap right there, potentially a fake fair value gap that we can still continue lower from right there. So the fact is that we need to overtake it before we can start looking for buys. That's it. So for example, a really good example is Bitcoin right here. On Bitcoin, if we go to the weekly time frame, we have this fair value gap. Now, I'm going to give you a whole lot of reasons why this bearish fair value gap is not a good fair value gap. Why? Well, first of all, if we were truly bearish, this ideally should have been the new fair value gap right here. That fair value gap did not even get created right there, and we already started to continue higher with a lot of bullish momentum right here. So when we trade back into this bearish fair value gap right here, it's not ideal. It's not a good fair value gap. So I have the suspicion that this fair value gap will not hold. but I can't act on suspicion. You can never act on suspicion. You want to act on facts. And the fact is that there is a bearish fair value gap. And it could surprise me, and we could still continue lower from it right there. So if I want to look for buys, we need to overtake it according to the rejection highs right there, if that makes sense. So in the case that you are very bullish and we create what you think is a fake fair value gap right there, you can have that suspicion. That is perfectly fine. Very good for your experience as well to build those suspicions. But you don't act on a suspicion. You only act on the fact. And the fact is that we need to overtake it first. That is very important to understand. So very good question. Very good question. Hopefully that makes sense. Hopefully that makes sense right there. All right. What is your average RR per trade? I'm not sure what my maximum RR is, but usually I target a 1 to 2 R. Yes, but I'm not sure how far it runs after that, etc., etc. Let me see. I see a recent question, the latest question here as well. Let me also go over this one really quick. Do you think 1 to 1.3 RR with 86% win rate is better than 1 to 2 RR with 62% win rate? I'm not sure what the exact data is behind that. So if it's more profitable, I'm not exactly sure. I would have to pull up my calculator, etc., etc., what the exact data behind that is. But whichever one is more profitable for you at that moment in time, that's the one I would be executing. So for example, over 10 trade sample size or even 100 trade sample size, if you gain more profit with an 86% win rate and with 1 to 1.3 RR, then I would go for that. If it's the other way around, 1 to 2 RR with 62% win rate, I would go for that, if that makes sense. I'm not exactly sure what the entire data is, if that makes sense. Yeah, ask ChatGPT. Perfect. Yeah, very good. Okay, let me know if that makes sense. All right, Anonymous, if the daily intermediate high is taken, but when we drop to the 4 hour, we see a bullish fair value gap. Okay, can we still look for a trade to the, I'm not exactly sure what that stands for, to the daily regular high, daily regular high, I assume? Or should we wait for a daily close to close above, a daily candle to close above the daily rejection high? Aha, that's it. Sometimes I confuse myself with all the all the synonyms, etc. Okay, let's see what we have. Okay, let me understand this. If the daily intermediate high is taken, but when we drop to the 4 hour, we see a bullish fair value gap. Can we still look for a trade to the daily rejection high, or should we wait for daily candle close to close above the daily rejection high? Very good question. Okay, I'm going to give you an example of the dollar right here. All right. So the dollar was super interesting the moment we started running this low right there to then continue lower. Now I'm going to indirectly somewhat answer your question, if that makes sense. And I need you to understand just the full picture. So the dollar right here was super interesting with an area of opportunity, essentially what we marked out right here, that gray box. Let me remove the rest. But this is a daily swing low right there. And the moment we see this daily swing low right there being taken, it's arguably the same moment we also see this daily intermediate term low being taken right there. So if you're waiting for a daily candle close right there to then potentially look to get involved, to then target the daily rejection high, etc., then you're waiting quite a lot. And sometimes you're going to be waiting too long and you're going to be missing the move, if that makes sense. So what I prefer to do is, if in your case, for example, a daily intermediate term high is taken, and if we turn that into this daily intermediate term low, we understand that this is the next target. So you always want to work with a next target. Then on the 4 hour, you can already start looking at what is the rejection on the 4 hour right here. On the 4 hour, we see we have this tiny rejection. There's basically almost no rejection with a tiny rejection right there, but we start running the rejection low immediately right there. Then this is already interesting to now continue lower towards the next target without waiting for the daily time frame, if that makes sense. And then once we reach the next target, that's where you slowly start zooming out to the daily time frame. I'm going to give you another example right here to really hammer it home. I hope it makes sense. But on Nasdaq right here, on the 15 minutes, this past week, we saw that we had this fair value gap right there. And we also have, more accurately, we are rejecting from the fair value area right there, which is where we create this rejection high. If you are waiting for the 50-minute in this case, and if this gets taken right there, you might be waiting for a long time right here. So we need to understand what is the next target. This is the next target right there. Perfectly fine. So right here, we also can go into the lower time frame to already understand more accurately, are we already running the rejection high? Here we see the rejection right there. From the rejection high, we now create a second sting above it, expansion candles. Now we can already look to trade towards the next target right there. And then afterwards, we can again go up time frames right here. So to answer your question, and I hope it makes sense, I first would go into the 4 hour, and then, like you mentioned in the former right there, you can drop to the 4 hour and then already look for a trade towards the next target, if that makes sense. And then you slowly start zooming out. Great question. Let me know if it makes sense. If it doesn't, of course, feel free to let me know. Okay. Oh, I saw a question right there. Let me see if I can bring it up. Good question. Is the prop firm review team full already? No, it's not. So if you want to apply to review prop firms with us, essentially it's free on your end. We only need your time, but we pay for the prop firm challenges. You can keep all the payouts, etc., that you might get. You can reach out to us, and we can make it happen if you are a good fit as well. So no, it's not full use yet. We're still looking at it. I mean, one-to-one RR is better for psychology. Yeah, very good one. I think it's very important to mention as well. Sometimes traders, they want to go for the best RR. I'm a perfect example. I used to go, or I used to be a little bit led to believe that 1 to 2 or 1 to 10 RR was the best thing in the world. And the further your RR, the better it essentially is. That's not true. That's not true. Yeah, let me do it SVY. Let's see. Let's see. And let me also explain why. Here, let me see. Here, now you can also do it yourself, SVY. Perfect. Okay, so what I think is very important to understand, the higher the RR, the lower the win rate is going to be, usually. So what's going to happen is you're going to take more losses. Now, since trading is also a little bit about psychology, of course, the more losses you're going to take before the next winner, the more psychological hits you're going to take. So see it like this. You might deliver eventually a knockout punch to someone. But if you get punched 10 times before you bring that knockout punch, it's very risky because you might get knocked out first before you knock out the other person. Now, I don't condone any violence, of course, but that's the analogy I'm trying to use. So what I think is very important to understand is that if you have a utopia of 1 to 10 RR right there with every single trade, and you have a very low win rate because of it, it's not likely to work out. Because if you take those 10 trades and only the last trade is actually that 1 to 10 RR, then what is going to happen is you're going to take 9 psychological hits. So you're going to doubt yourself. You're going to take bad trades. You're going to potentially overtrade, to revenge trade. So it's very hard on your psychology. Now, 1 to 10 RRs, of course, quite a far difference, but for someone, it could also make a difference between 1 to 1 RR, 1 to 2 RR, etc. So it's also something to take into account. The reason why is because in your data, eventually we want to get to a stage where we're going to measure your maximum RR. And we're going to see what is the ideal RR for you to target according to your win rate, etc., etc. Then that doesn't mean that going for the higher RR is always the right thing to do, if that makes sense. If you, for example, struggle with your psychology. Very important. Very important. Very important. True, now flow. Very true. Very true. Very true. Very true. Okay, let's see. Let's see what we're dealing with. Mr. Bob. How are you doing, Mr. Bob? Let's see. Arjo, if rejection high, only on the 1 hour, but area of opportunity the 4 hour. Where does the area of opportunity start? How do we know if we are running, not sweeping rejection high on expansion entry? Does area of opportunity work better on AM, PM session? I don't necessarily have a preference regarding AM, PM session. I have a personal preference, but this has nothing really to do with area of opportunity. I have a personal preference of PM session. Reason why PM session, usually the direction is already quite clear, so you can already easier get involved as well. If rejection high is only on the 1 hour, but area of opportunity on the 4 hour, where does the area of opportunity start? On the 1 hour, essentially, where the rejection high is, that's where the area of opportunity essentially is, if that makes sense. So if the rejection high is on the 1 hour, then that's also where the area of opportunity is, if that makes sense. That's very important. Hope that makes sense. Hope that makes sense. How do we know if we are not sweeping the rejection high on expansion entry? Yeah, so if we go over a few examples, I want you to study this because I think running and sweeping is something that really needs to be studied. So do a case study around that. Simply start marking out all the highs, all the lows right there, and start looking at the difference. What is a run? What is a sweep, etc.? Can you notice a pattern? Now, one pattern I really like is, for example, we have this rejection high. The first time we sting above it, we create a rejection right there. The second time, we now create an expansion above it. To me, that's a sign that we are running it. So for example, on gold, that happens, very similar example, happens with the 4-hour rejection high. Right here. A rejection, it's almost the exact same candles. It's beautiful. But right here, we have the rejection above the rejection high. And then we start to create the expansion candle above. Right there. When that happens, that's perfect. That is perfect. All right. I think the trading space also makes it a bit unrealistic with the higher Rs I'm seeing online. Oh yeah, but yeah, that's the trading space. That is the trading space. The trading space is such an interesting space. Such an interesting space. It's very odd. Very odd. There's a lot of weird things out there. Let me know if this makes sense, Mr. Bob. All right. Let's see, Arun, you're back. You have 2 great questions. Okay, let's see. Gold made nice clean movements pre/on FOMC day. Still avoid trading FOMC. If nothing is stopping gold from reaching all-time high, should we still wait until Tuesday? No, not necessarily. It's also something I want to touch on. But for your trading plan, you really want to look at, okay, and again, I need you to understand, trading during the FOMC release, very tricky. Don't do that. Don't do that. You're going to likely experience slippage, etc., etc. But I think it's very important to understand you can trade ahead of FOMC. If you trade ahead of FOMC and your data says that you can perfectly fine trade ahead of FOMC, that's perfect. So to add on to this a little bit, why is the general thesis, the general theory that you don't trade ahead of FOMC or any other big news event? That is because of the fact that it's likely to consolidate. But this is not always true, of course. And for your trading plan, this might also not be true. So what I think is very important to understand is just start trading it and start seeing, is there an actual consolidation? If, for example, there is a consolidation like this right here, and now you understand, oh yeah, we have FOMC, we have CPI the next day. Okay, then I prefer to wait. But it's a consolidation, you're going to wait anyway. You're not likely to get involved, right, in a consolidation. So what you can do is you can simply trade it right there if the price action is good and see over a large sample size, okay, does the data objectively tell me if trading ahead of FOMC statement is bad or good? And of course, still watching out during the actual release that you don't experience any slippage, because that is of course also a huge point. If that makes sense. I saw, by the way, I saw the latest question right here pop up. Let's see. It's a great question here. By Anonymous, hello. Very good question. Okay, let's see. What do you think about 1-to-1 risk to reward ratio? I think, by the way, you shouldn't target a risk to reward ratio just because it's easier for you. So what I think is very important to understand, at least from my experience, going for a lower risk to reward or trying to make it work is not necessarily always the best thing to do, if that makes sense. If you want to use a 1-to-1 risk to reward ratio, that's perfectly fine. Absolutely perfect. It's perfect if it's the most profitable thing for you to do, if that makes sense. If that's the case, stick to it. Stick to it. There's nothing wrong with that. There's nothing wrong with that. Don't get distracted by people telling you, oh, but I target a 1-to-20 R. Probably not, if that makes sense. Let's see. Hello, Arjo. Can you please show us how to check respect and disrespect from one time frame below with few examples? Of course. So gold right here, we already saw it with a couple of examples right here as well. So right there, we see it with the 4-hour and the 1-hour. Now, the important thing, again, when we go down time frames, it's quite easy to see, right? quite straightforward. And in hindsight, it might be like, oh, well, this is the easiest thing in the world. It's not, because the moment it is live right there, you need to take into account what is the 4 hour doing? What is the 1 hour doing relatively seen to the 4 hour right there? Is the 4 hour not doing something like this and then creating a larger rejection? And that's super, super important to understand. So if we take a look at this 1 hour fair value gap right there, the process essentially remains the same. The only tricky thing is that you now need to take into account one extra time frame right here. So for example, we see that we have this rejection high. The 15-minute right here creates this rejection later on from the rejection high. You still wait, you still wait. Then once we see these new expansions, this is where we start running it right there. That's quite important to understand. So for example, if I go into the 1 minute time frame right here, on the 1 minute time frame, I might be convinced the moment we reach above this rejection high that we are running it right there. And I can already look to get involved. But now you also need to take into account, hey, what does this actually look like on the 15 minute? On the 15 minute, it's just the first candle. So we could still create this rejection right there to then later run it. So often, and this is practice, you need to understand this. What often happens is when people struggle with a rejection high, they do something like this the first time. And they get taken out right there. Come on, they get taken out right there. And then it runs in their favor. This is practice, this is experience, this is what you need to start seeing. So do a case study around that. That's important. If that makes sense. Good question. Thank you. Let's see. Let's see. A lot of good questions right here. A lot of good questions. Okay. Thank you, Mr. Bob. Thank you. Thank you very much. Thank you, Mr. Bob. Thank you. I appreciate it a lot. Thank you. Thank you. My question is, in two candle rejection, is there a compulsory for a second candle close above the first candle rejection high for taking entry? Please elaborate. Very good question. So what you'll often see me do as well is the moment that neither candle is really a rejection, you can already take a look at the second candle running the rejection high, running the first rejection high that's essentially not there. So for this, I need you to understand the two candle rejection rules. What are the two candle rejection rules? If the first candle is not a rejection, more specifically, then what should the second candle in theory do? The second candle can sweep the previous candle high to then create a rejection. Now, sometimes you will see that, let me see if I can find an example of this. I think this is a good example right here. Here, from that 4 hour swing high right there. The first candle is not a rejection. So second candle, what can happen is it can sweep the previous candle high to then create a rejection. So what is important? If you already want to trade this candle right here to continue higher, we should run this previous candle high. What is that previous candle high on the lower time frame? It's a swing high. So if you now go into the lower time frame right here, let's see where it exactly is. Oh, there, right there. If we start running this previous candle high right there, which is a swing high, two candle rejection, etc., you can already look to get involved right here, if that makes sense. Let me know if that was your question or not. Let me know if that makes sense. All right. I still have some energy in me. I can still go on for some questions. Let's see. Let's see. All right. I see you're spamming this question right here, by the way, Obion. I'm going to do my best to get to the question right there. If you want, because your question is also right here. It's right there. So please don't spam your question. The more you spam your question, the lower the probability is that I'm actually going to answer your question. It makes me just not want to answer it, if that makes sense. It makes me want to be a very pity. Makes me want to be very pity and just not answer it. But I'm going to get to the question. Please don't spam it. It's all right. Okay. Price came into the fair value gap and you see a sharp turn, but it doesn't create a re, but creates a new order flow leg higher. Do you have to wait for a new ST plus re? No. As long as we create that new re, that's the most important part. As long as we have a new re, a new order flow leg, so that's perfectly fine. That's perfectly fine. So in your case, but creates a new order flow leg higher, that's perfectly fine. That is absolutely perfectly fine. Do you have content covering the macros? No. I'm not a big fan of the macros. I think if your trading plan really comes down to you need to execute in a specific 10-minute window, it's probably not a great trading plan. But that's thank you, Obi-Wan, thank you. But that's my opinion. That's my opinion. Okay, when I follow my trading plan, I by the way, to rant a little bit on that as well. I think macros are more of I see it more as a coping mechanism, as in it needs to be an extra tool in order to be able to actually have somewhat of a profitable trading plan. For me, that's, I don't know, I'm not a big fan of that. I'm not a big fan of that, if that makes sense. All right, let's see. There it is. There it is. When I follow my trading plan, I perform well. Okay, you follow your trading plan, you perform well, but after seeing results, I lose discipline. My performance drops and I return to 0. How can I fix this? Sticking to your trading plan. But of course, that's a little bit of a silly answer right here. I think is very important. There's no magic answer, by the way. I think psychology is a very nuanced thing. There's not going to be a magical thing that I say that all of a sudden is going to make things click. So that's very important to understand, I think. But on top of that, again, what is the one thing that has been delivering you results? It's following your trading plan. What is the one thing that hasn't given you results? It's not following your trading plan. So then why not follow your trading plan, right? It's if you want to perform well, if you want to lose weight, what is the thing that has been helping you lose weight? Not eating cookies. And if you want to lose weight and you have been eating cookies and it has not been helping you lose weight, then why do you still eat cookies? It just becomes, it becomes a thing of you're not gaining anything from not sticking to the trading plan, if that makes sense. So you might as well stick to it. So the discipline right there, I think, comes down a lot to also how disciplined are you outside of trading. So for example, do you stick to your own promises that you make? Hey, I'm going to clean my room at the end of this day. Do you actually clean your room? I'm going to the gym tomorrow. Do I actually go to the gym? If you make that promise with yourself, then stick to it. And that way you become more disciplined and more disciplined. Now, of course, there's some nuance to it because it is very important to understand. If you don't really have a very clear trading plan, it's very important, or it's very difficult to stick to it. So if your trading plan is not clear enough, and you don't know what you're waiting for, you can't stick to it, if that makes sense. So then we can't really blame discipline because you don't know what you're waiting for, you don't know what you're looking at, if that makes sense. But other than that, I would advise start being more disciplined also outside of trading. See why these habits form. So oftentimes, for example, the reason why you fall into these bad habits of losing discipline, something happens before that. For example, are you on a winning streak? And because you're on a winning streak, you perform well, and then after you lose discipline because now you think you're invincible. Okay, then we need to interrupt the moment you are on a winning streak. Doesn't mean you need to be in a losing streak, no. But you need to recognize I'm on a winning streak. Usually that means I am more susceptible to now do something I shouldn't be doing, if that makes sense. So that's very important to understand. And that way you slowly get better at it, if that makes sense. So for you as well, the goal right here is not to overnight all of a sudden be disciplined. That takes time. It takes time. So can we slowly become more disciplined? Can we reduce the drop in performance, if that makes sense? Let's see. Wanted to pick out this question right here as well. Here, I'm not sure where my question has disappeared to. No worries. Have you noticed a change in the market cycles, or is it just me? Some of my trading setups have changed. Yes. And for me, at least, it has a lot to do with Trump being a presidency. Ever since that happened, a lot has changed. A lot has changed regarding the volatility, etc., etc. So yes, some things have changed as well, right there. Now, usually, I want to mention this as well because I think it's quite important to understand. The market changes quite a lot. So the market is somewhat evolving constantly, if that makes sense. Now, when I say that, don't be frightened or anything, because when people used to tell me that, I used to be like, oh, come on. I now need to create a new trading plan every single month or something like that, or every single week. No, it's not like that. you have your set trading plan and you slowly evolve with the market. That's it. So you slowly start evolving with the market, if that makes sense. And if you slowly start evolving with the market, so you constantly start to find solutions to the problems that you have, then you'll be all right. You'll be all right. I think I see two questions that tie in very nicely. Arjo, why do you never flex your money? It's not me. It's not me. It's not me. It's not the way I like to help people. I'm not sure if I'm the only one, but I absolutely hate. I hate lifestyle content. I hate the I'm a millionaire day trader, day in the life of a millionaire day trader. I absolutely hate it. It's so stupid, in my opinion. It's so stupid. It's so silly. But that's just me. It's just me. That's I don't like that personally. Let's see. Why does everyone launch a new course, a new concept, etc., when only 1% traders make money consistently in the long run? I think there's a very easy answer to that. I think the majority of people that also do that are just looking for a financial gain, right? That's it. That's it. So that's the same thing. For example, what I think in lifestyle content, I think lifestyle content is just very dangerous because the expectation that you put onto someone is wrong, if that makes sense. So if you get into a job purely because of the outcome that you can potentially have, that's extrinsic motivation. There's actually a lot of studies done on this as well. When it's extrinsic motivation, then what happens is you're less likely to stick to it because you're not actually interested in trading. You're just interested in what it can do for you, potentially. So that's a wrong relationship, if that makes sense. And a lot of people, for example, launching a new course, launching these new concepts, etc., a lot of people try to take advantage of that, of course. It's humans. It's human nature. All right, let's see. Let's see. There are times where price disrespects the PDA but not creating rejection highs as low. How do you approach in those cases? Well, it depends a little bit because if it shoots past the rejection, for example, so if it completely, there's no rejection at all, there's no candle. So in one large candle, it just does something like this. Then there's no rejection. You can potentially go into the lower time frame to find your rejection. But other than that, there's always going to be a rejection. So for example, according to two candle rejection right here, there's also a rejection right here on the 4 hour from this rejection high. But the first candle is not a rejection. So the second candle should have been a rejection. So the rejection, the two candle rejection is already over, if that makes sense. So that's the difference right there. That is very important to understand, in my opinion. So unless it's going to be one large candle like that, then you can potentially go into the lower time frame. But on the 4 hour here, there's also a rejection, if that makes sense. It's a good question. All right, let's see. Hello, TJ. Hello, TJ. Hello. I've been trading a challenge account and risking 1% per trade. When I take a loss, I begin to take impulsive trades. What advice can you help? Down 4%. Well, what I think is very important to understand, when you haven't seen the light of profitability just yet, so you haven't really been close to being profitable or haven't really had that feeling just yet, if that makes sense. There's no evidence supporting the idea that you are profitable or close to being profitable. Take one trade a day. Find one good trade a day, and that's it. And then close your chart. So whether it's a winner, whether it's a loss, whether it's a break even, close the chart. After that, don't do anything else anymore. And I think that's very important to understand because a lot of traders, and I recognize this in myself as well, when you take a trade, you're not the same anymore. You're not the same person anymore as before you took the trade. So take the trade perfectly fine, but afterwards, don't do anything anymore. So then you have a whole day, for example, to refresh, etc., to regain that focus again. You have a whole day right there to gain control again over your psychology. I think that's very important. And then slowly you'll start seeing, okay, you get better at that, if that makes sense. Yeah. Yeah, what I also think is very important, I think Andre mentioned it here, right, as well. To TJ, Andre says, buy another challenge gives you a little bit of peace of mind. For TJ as well, and I like that a lot, Andre, that you mentioned that. What I think is very important, when you're just starting out with challenges, have one challenge that you can just, with low risk, execute on and just get very comfortable with trading. very comfortable. And then once you are ready, buy another challenge and then slowly start to up your risk a little bit, take it a little bit more, well, not necessarily more serious, but up your risk a little bit. So that first challenge, for example, a challenge right here that's down 4%, try to lower your risk and try to see how far can you come right there. Just it's such a great experience to gain some experience, if that makes sense. All right, let's see. All right, let's see. Slowly, my brain is getting fried slowly. Let me take a sip of water. Okay, let's see. Creating a buy seems very doable, but when it comes to entry, mind feels screwed every time. Always get confused while deciding, is this retracement enough? I think there's a few steps that are important to take before you start taking a look at the entry. So if you don't really struggle with buys, you first need a context area. So where exactly are you going to look for your entry, if that makes sense? And then all it comes down to is just what entry is your preference. Is that waiting for a certain fair value gap? And try to make it as objective as possible. I wait for example, a fair value gap, staying back into it, that's my execution. Okay, I wait for just an expansion candle, that's my execution. Okay, perfect, if that makes sense. And that way, you first want to focus on that context area, as we like to call it. That's important. And then that's where you start looking for your entry, and that entry should just be as objective as possible. So your mind can't really screw with you because you just follow the rules, if that makes sense. Let's see. Hello, Anonymous. I heard about inverted fair value gaps lately. Could you explain what you think about that concept? Do you look for them? I heard you say fair value gaps are only valid once. Complete rubbish, inverted fair value gaps. If you use inverted fair value gaps, I'm sorry to say, but you don't understand fair value gaps. I'm not here to argue about if you understand fair value gaps or not understand fair value gaps, but the way we use fair value gaps already takes into account inverted fair value gaps. So if for example, someone comes to me and they say, hey, Arjo, I use your concept, but I also use inverted fair value gaps, then you don't understand the concepts. You don't understand it. So for example, this fair value gap right here is valid the moment it gets a sting into it with the rejection high. Now, drawing it to the left, that's not relevant anymore. So if you consistently follow the most recent fair value gaps and you use the concepts that we use right here, then the inverse fair value gap right there, it's not relevant. It's a little bit nonsense in my opinion. It's not relevant. And if you do use it, just know you're going to lose a whole lot of accuracy, because that's the same as me drawing a random line on this chart right here and then saying, oh yeah, but in the future, that's potentially going to create a support and resistance. I can draw a random line and say the same thing right there. Support right there. It's support right there. Support turning into resistance right here. It's just a random line. Just a random line. So that's very important to understand. That's very important to understand, in my opinion. You don't need it. You absolutely don't need it. Because this is the same thing if you take a Snickers bar and you're going to take a Snickers bar and you're going to say, oh, this would be really good if I dip it in chocolate. It already has chocolate. You don't need the chocolate, if that makes sense. You're just doubling it. You're just making it worse, if that makes sense. So that's very important to understand. If that makes sense. That's the way I see it. All right. Let's see. Why fair value gap does not hold an Asia and London session, for example, on gold. The 10th of September, where we moved into the daily fair value gap and created a 1-hour ST. Fair value gaps don't really need to hold every single time. That's not necessarily what fair value gaps are about. So that's first very important to understand as well. In this case right here, you could argue it's because of market close as well. So we were on the Friday right there and we used the swing low to continue higher. That's it. Yeah. Ugh. All right. I'm going to end it here. My brain is a little bit fried. Let's see. Let me see if I can pick out a few questions that I think will impact everyone a lot. Let me see if I think there's a few questions that are very good that need to be answered right now. Let's see. I like this one. This is very good. Very good. Captain Super Willy. Okay. Lovely name. Lovely name. Let's see. How would you advise someone to trade their own money? How would you establish drawdown limits in order to simulate risk management of a funded account? Very good. So, if you do trade your own money, your personal capital, let's draw it like this right here. You want to use boundaries consistently. So, for example, this right here, let's say 100K is going to be your opening balance right there. Okay. This is going to be your so very similar to a prop firm account. This is going to be your drawdown limit right there, or might be a little bit higher right there, just to make sure you don't go into deep drawdown where you lower your risk. This right here is going to be your target. Now, if you start trading right here and you start going up in profit right here, and let's say you eventually reach 105K right there. Okay, once you reach 105K, then you want to now change it. Let's see. So now you want to treat your 105K as your opening balance right there. And your new drawdown limit is then, for example, going to be, let's say 103K right there. So now, if you now drop below your 105K, you're immediately going to lower your risk. So you're in drawdown at that moment in time, if that makes sense, because 105K is your new opening balance. So right here, if you now start to continue higher again, and you eventually might reach 110K, you do the same thing again right there. This is now going to be your new opening balance. And that way you adjust your risk every time you reach that 110K, if that makes sense. So if you go below drawdown right there, below into drawdown, below the 110K, you lower your risk, if that makes sense. That's the way it's, I found it's the best way to scale if it's not a prop firm account, if that makes sense. All right. All right, team. My brain is fried. I'm going to end it here, team. Thank you, everyone, for being here. Thank you, everyone, for being here. Take care. Have a great rest of your Sunday. If it's already Monday for you, then have a great rest of your Monday as well. Hello, Rumples. Hello. Take care, everyone. I'll see everyone on, again, Friday, Sunday. We have these live streams as well. We'll see if we can potentially add one throughout the week as well. But usually I am already busy with the MMT as well throughout the week. So Tuesday, Thursdays when we have live sessions in the MMT. So I'm also already quite busy. But let's see, potentially. All right. Thank you, everyone. Take care. And I'll see everyone at the next one. If you haven't, you can check the daily buys video as well. Okay. Thank you, everyone. Take care.